Good morning and welcome to Markets Now. I'm Michelle Rook along with Kevin Dooling with KD Investors. We're seeing a little strength in the livestock futures here early this morning with grains kind of mixed. Wheat is lower. We've seen corn on both sides is steady and soybeans a little bit higher, and both soybeans and meal higher here, Kevin. And some of that is follow through buying after a little higher day yesterday. But, are we continuing to trade Argentina weather? Because I've got to think that, these Argentinian crop estimates, including the very low Rosario Grain Exchange estimate, have got to be kind of factored into prices, aren't they?
Yeah, I think so. I think we've ran that bus as far as we can. The number that jumps out at me today that could explain some strength is that we're still more than double the export pace needed every week. I didn't write down today's number, but it was it 700,000 tons, and we need 300 to meet USDA. That's not exact estimates there, but so we're still kicking out the exports, and demand's what leads markets, and so you got to like that. I haven't seen any Chinese announcements this week, so maybe next week we don't have that. But yeah, good performance from the soybean exports as well as corn.
Yeah, definitely. We did see exports. As far as the total, I have the bushel conversions, and we came in at 1.754 billion bushels. So we're still about 2% above where we were last year, just to reinforce your point there. Okay, so corn. Yesterday, we didn't get a whole lot in the report for that market, but we continue to be pretty sideways here. You believe we're at a technical crossroads. What's it going to take for us to get out of that, or get out of this coiling mechanism that we're seeing on the charts?
Well, when I look at it, it looks friendly. You've got a flat top with a rising lows. So typically those things, jump out the upside on that. So to me, it looks favorable at the moment. Excuse me. And, we're finally seeing those exports, another good week, another, week that'll help get us caught up some. Still a long ways behind last year, but we're seeing the numbers we need to see. We just need to continue them. So to me, that we're kind of coming to the apex on that wedge. So technically, so if we come out above, can break through that flat top there, then it's going to look great. If it fails right here, then it's not. So to me, we're in that time frame where I expect to see some bigger movement in that market in the next 10 days. I think we're going to see it break out of the range one way or the other.
Right. I'm curious about exports. Of course, USDA left exports unchanged yesterday in the WASDE report. This morning, total commitments are still 41% behind where they were a year ago. So USDA obviously thinks we're going to get caught up at some point.
Well, I think so. They're fairly, but we've got to crank out, close to 900,000 tons a week, 800. That's a big ask.
Yeah.
But when you look at the world, it all comes down to that Brazilian crop, and it comes down to Brazil capacity, and how much soybean, how many soybeans are going to ship, and we're kind of lining up to where the U.S. is going to be the only option here for a little bit. So it's favorable in that regard. It just, the question is, what does China do? It looked like there was 300,000 tons this week to unknown. Was that another Chinese sale to tap onto the ones we had last week? So if they're quietly buying corn, then you gotta look favorably at that.
So. Yeah, and then we're going to need some sort of a problem with the second crop, Brazilian safrinha corn, if we are going to continue to move this market higher. And they're seeing some delays in terms of the harvest up in the center and northern part of the country. And so that is a little bit of a possibility, isn't it?
I think so. Yeah, I think it's definitely been a concern. And the later they go, the more, heat's going to get thrown at the corn crop at the wrong time. Right. So there's just no room for error in anything. And that's, the markets are going to be sensitive to that.
Yeah, so. You bet. If they get some delays here in terms of planting that safrinha corn crop, maybe that could give us the boost we need. What about the wheat market? Of course, we were up yesterday. The chart pattern is looking much better as we're pretty well off of the lows. But today we just kind of got hurt by these exports.
That's my opinion. Yeah, we had a big move yesterday, and then a double-digit move yesterday, and today we're back in that filling a little bit. Exports were disappointing. We've had a good run of exports since about mid-December, and today's number was as we talked off camera, it was we laid an egg today, but especially with white wheat, it was disappointing. South Korea canceled their tender or canceled one of their cargoes. But still, at the end of the day, you got to look at the war, and the war rhetoric going on is ramping up, and you've got the funds short almost to soft red crops. And if something blows up, if a port or a ship gets hit, something, I mean, no one's going to let them out of that position for at least $2. And so they're just so complacent about it. It seems crazy to me, but and it's we'll see how it goes. And one of the stats I found fascinating when I gave a talk yesterday, it makes you write these on paper, but for the last 3 years, usage has exceeded production, and we have yet to build or yet to grow a crop as large as what usage has been the last 3 years, assuming USDA doesn't dial usage back by 10 or 20 million metric tons. So it makes you wonder, how much downside a market like this could have. I just don't see it right now.
Right. And to your point, the funds were short about the same amount, maybe not quite as much, about a year ago, and they certainly got it handed to them in spades after the war broke out. Let's talk about the cattle market. So we scored new contract highs a couple of days ago, then scored just a little bit of a reversal. But that market, do you think we're going to continue to be able to kind of push into these new highs as long as the cash market keeps pushing us, which it looks like it probably could? I've seen some 159 cash trade, but most expectations are for higher, aren't they?
Yeah, I've heard some really bullish rhetoric out there. I mean, I'm just concerned when you get people that bold up, but the numbers are thrown around are up there. But at the same time, you've got cash buyers buying clear out to June, July. To me, the market looks great. Technically, it looks good. I think we've got a great foundation there with low numbers. We're apt to see some pullbacks if corn jumps through that flat top we talked about. If it gets another 30-40 cents under it, that may pressure us in the short term. But longer term, I've just got to consider cattle a buy.
You bet. And cattle are a little stronger here this morning, as well as the hogs. And what do you think? The cash market looks like it's finally bottoming. We had National Direct Hog trade up about $3 yesterday, and that index finally looks like it's bottoming. So do you think this market can continue to recover here?
I think so, just based on how low it got, plus just as far as competing goods in the supermarket. I mean, it's especially if cattle's going to make a move, it's going to price itself out a little bit. The pork's going to move in, and it should support itself. I can't be that bearish as cheap as we got there. So.
Yeah, no doubt. When you look at the price compared to other proteins, you would think that demand would be picking up. That's for sure. All right. Thanks so much for joining us. Kevin Dooling with KD Investors, and I'm Michelle Rook with Markets Now.